Todd Churchill. And Todd, are you with us? We'll get you.
I am here.
Awesome. Very good. So Todd Churchill, I got to know him again on this journey. One of the mentors that I didn't mention was Gerald Fry. Gerald Fry taught linear measuring. I was at a live class with which virtual wasn't even a thing back then, was it, Todd?
No,
Um, Early
all live.
2000s. And yeah, we were at Wally Olson's place and we were measuring bulls. And I think you showed up there. You weren't a participant, but you showed up there. You were just kind of really getting rolling with Thousand Hills cattle. And I remember
Right.
just thinking, man, this guy's doing some pretty cool things. And really that was my first impression of you, is like, here's a young man who's got some things figured out. And as I've watched you over the years, it's proven out. Like, you build an awesome company, and now you're helping others to be able um, to build businesses that have a strong, solid foundation, to help ranch farmers and ranchers to be able to measure in a way that they can understand whether they're successful and what to change to increase that success. It's one thing, we all have to do taxes, but taxes are a terrible way to measure profit, right?
Right.
It's
That
not,
is
that's,
that's right.
it's not, it's just not I mean, your banker's going to ask for them. I don't really even look at them other than just
Right.
look for glaring mistakes. That's my CPA's job.
Yep.
Um, so you're going to help us to really learn how to be able to dive in and build enterprise budgets and a tracking system that makes that work at a
Correct.
level that we can understand, kind of at the ground level, farmer and rancher
Hmm.
thinking, very practical. So,
Yep.
so Todd, welcome. We're glad we're super glad that you're willing to join this. What if you if you could take like one key takeaway, like a lot of us are entrepreneurial minded here,
Hmm.
and maybe this will tie into your presentation, but like one key takeaway from starting businesses and growing businesses, what would that be?
I think that we're probably going to lead right into that. We're going to start by defining what is a legacy business, and it's that's really the key to it. The other thing is one of the many things I learned from my dad was that accounting is the language of business. And if you're going to be in business, it's a tremendous advantage if you're a native speaker. Accounting is the language that we use to compare businesses and financial opportunities. It's the language that anyone that evaluates your business for a loan, for an appraisal, is going to use. And you're at a real disadvantage if you require everything to go through a translator, somebody who can translate accounting into something that you can understand. So one of my goals for my clients is I don't want to be your translator. I want to teach you the skills so that you have basic proficiency in accounting, no different than traveling to a foreign country. It's a whole lot more fun, and you have a much deeper, richer experience when you can speak the language, even at a basic level. You don't have to have the grammar perfect, but you do have to be able to understand what's being said to you and be able to respond. That's one of the basics that we have, um, and that's one of the basics that I bring to my relationships with clients. Maybe just a little bit about my background. My career has been a combination of cattle and farming and accounting. I grew up in a I grew up on a farm, but I didn't grow up as a farmer. My dad's an attorney. His dad was an attorney. My younger brother's an attorney. And we've had a farm that my dad took over. It was 80 acres. My dad took it over when he was 16. His dad had bought it on a whim and had never been interested in it. Um, my dad started spending his summers on the farm when he was probably 8 or 9 years old with the family that lived there and farmed it. The next door neighbor was an old cowboy from Colorado. This is our farms in Illinois. And that cowboy bought my dad a pony and a saddle and got him a job at the sale barn. And my dad's been addicted to horses and cutting horses his whole life. So I grew up around horses, cattle. We had a 500 head feedlot and a farm. But the farm was always one of many enterprises that we operated. And, uh, and so I, it, it's foreign to me to think that we're only going to do one thing with our life, or we're only going to have one source of income. That doesn't require enough resiliency or flexibility to succeed. Went on to college. My dad isn't great at building the teams, to refer to some of the slides that you were talking about just a few minutes ago. So there wasn't a clear opportunity for me to be involved in a family business. So I went to college in Minnesota, went into public accounting, and then after a couple of years learning tax work and accounting, I started a consulting practice as a part-time chief financial officer for food and agriculture companies. One of those was a startup meat processor called Lawrence Meats. Became somewhat famous because Michael Pollan devoted a chapter to us in The Omnivore's Dilemma. Learned the niche meat processing business there, and then had the opportunity to start one of the first grass-fed beef companies in the U.S. back in 2003, which was Thousand Hills Cattle Company. That grew very quickly. I was trying to do something that every single person that I met in the beef industry said was impossible, which was to produce a fresh, great eating experience, 100% grass-fed beef product. So these are well-marbled cattle that would grade high select or low choice. And this is the kind of beef that people would eat a second time, even if it wasn't good for them, even if it wasn't healthy. And so that sent me on a journey to learn everything I could learn from mostly heretics, people like Gerald Fry and Dr. Will Winter and others who were considered, whose ideas were considered old-fashioned or outlandish by the conventional beef industry. And yet that's where I found a lot of the answers that I needed to do what I wanted to do. Ultimately sold that business in 2015. I've had a consulting practice ever since, which I merged into Clifton Larson Allen. We're the eighth largest CPA firm in the country, and I run our national team that does outsourced accounting for large farms and ranches. I've also got a couple of other grass-fed beef and specialty beef projects. I'm working on a pilot project right now to supply beef to a very, very large beef buyer that will probably turn into a pretty significant beef white label beef supply chain contract next year. So still very much involved in the cattle world. We have a family cattle ranch in Oklahoma where we train cutting horses and run about 500 mama cows.
Perfect.
All right, I'll share my screen here.
Yeah, jump right in. We sure welcome you, Todd.
All right. Are you all seeing this now?
Yep.
All right, great. So I'm going to talk about how we provide remote accounting services for our ag clients. And got a couple of required slides that have some disclaimers at the front, but I want to start by focusing on what is a legacy business. I want to understand, I want to get rid of this too. All right. So what's a legacy business? We've talked a lot about that today. And the first thing we have to get clear on is that just owning a ranch or a farm is not a legacy business. All that means is that you are probably a multi-generational owner of a resource that is increasing in value, the underlying land. That has nothing to do with a legacy. A legacy business is a business that has 5 attributes. One is that it's a business that produces a product or a service that customers can't live without. That product or service is very difficult or impossible for competitors to duplicate. You have the flexibility to set your price so that as your costs go up, you're able to pass those costs on to your customers who can't live without your product, in large part because your competitors can't duplicate what you do. You're profitable, so you can deliver this product or service to the marketplace profitably, and there's growth happening because there's more customers that want your product and they can't live without it than you can currently service. How many of you have a business, an ag business that's based on ownership and control of land, that can check any one of these 5 boxes? Probably few. Few of my clients, this is not the definition of a farm or a ranching business. We produce a product that's a commodity, so it's no different than all of our competitors. The moment that it leaves our property, unless we've used some sort of a third party verification or certification that follows that product all the way to the consumer, our product is, oh good, my motion sensor lights just went off. Our product is identical to all the other product in the marketplace. It's anonymous. Can customers live without our specific beef? Sure they can. We've got, people around the world want to eat beef. That's not a problem. Beef in general is a product customers can't live without, and they want more of. One of the first things people do in other countries when they have the income is they want to eat more beef. But there's no way for me to make that my beef from my ranch. Tough to set a price. The market tells me what the price is going to be. Profitability varies by year, and growth only happens if we can afford to purchase more land. So we're starting with a challenge. This is harder than we thought. So the whole point of understanding enterprise accounting, the whole point of thinking about enterprises is the response to this. Adding enterprises to our ranch or our farm is how we respond to the fact that our standard cow-calf production model doesn't give us any of the things that we need to create a legacy business. So in order to have a legacy business, we're going to have to do something different than produce a commodity. This is the first way that we respond, and this is we're multiple generations into varying kinds of response to the fact that we don't have any of those attributes of a legacy business, but we are raised in a culture that values legacy, that values keeping land in the family, and that tells us we are abject failures if we fail to keep that land in the family. And yet, no one teaches us how to do anything other than produce a commodity product, which will guaranteed not produce a legacy business. You cannot have a multi-generational legacy business unless you do the things that I had on the prior slide. So what have we done for the last 40 or 50 years? We tell ourselves every day in 1,000 different ways that it's worth it to live this way. And of course it is. I live on a farm out in the country with horses and cattle and chickens. I've raised my 6 kids there. My wife and I love that. But we tell ourselves that the sacrifices we make are worth it. And that may be true, but the first thing I'm sorry. Is there a comment?
Oh, you're probably good. Oh, now I muted you. Sorry. I meant to mute the others.
All right, good. First thing that happens is we tell ourselves that it's okay that we are not economically competitive with other ways of making a living. We get off-ranch jobs. We send our kids away to college, and we know that they're probably never coming back because there's no money for them here. There's no opportunity for them because our net income is shrinking every year as our expenses grow at roughly the rate of inflation or higher, and our income doesn't keep up with that. And then at some point, we leverage the increase in land value either through debt or by selling pieces of it off. This is, without putting a lot of thought and energy into it, this is the typical path that happens when you don't have a legacy business, but you think you do. And you know, and the part that's so sad is that we all feel incredibly stressed out because we're taught from an early age there's something that's almost unconscious, this pressure that we're supposed to be able, we ought to be able to keep this in the family. And yet we have a fraction of the farms and ranches, farm and ranch families in every rural community that we did 20 years ago, 40 years ago, 60 years ago. So what's the solution? Well, before the solution is you really need to study history, and you need to understand how the broader economy, a debt-fueled economy, works. So the first thing that I want you to really be clear on is that commodity markets, by design, are only designed to keep the average producer from quitting or failing or stopping to produce. They're not designed to provide a profit for the average producer. They're just designed so commodity markets return the average cost of production, not including profit for the landowner, just the cost of production over the long term. So if you are the average producer over a long period of time, over a 10-year period of time, you can expect to get paid a price for your product, whether it's weaned calves or corn and beans or hay, equal to what it costs you to produce it. But you're never going to get paid much of anything for your time. All right, so if we know that, then there's 4 ways that we deal with that reality. The first is we reduce our lifestyle expectations. We talk a lot about how we don't need to have the same lifestyle that other people do that live in more urban areas. That we appreciate the intangible benefits of living where we live and being able to do what we do, which is wonderful. But if that was all it took, why are we losing farm and ranch families? Why are rural economies and rural communities shrinking instead of growing? That's really just a coping mechanism to help us to go for another year without actually dealing with the root problem. And the root problem is that the commodity market, we're an average cost of production producer, and the markets are never going to reward us for any more than our cost, than return of our costs. So once you get past the coping mechanism of simply telling yourself it's okay that we're not succeeding financially, now you get to the point where some good things can start to happen. But you have to give up on the idea that you can just keep telling yourself it's okay. The first thing you have to do is say, this is not okay. This is not acceptable. I'm going to figure out a way to live the lifestyle that I want to live, farming and ranching, and I'm going to figure out a way to generate reasonable financial returns because I'm going to figure out how to be different than average. So there's 3 ways to do that once you're through the first coping mechanism. The first is you're going to increase your scale to spread your overhead or your return to the owner over more production. So if the average cost to produce a weaned calf in the United States is $900, and you can do it for $700, and your goal is to produce $50,000 of free cash flow from your business, how many calves do you need? Well, if you're making $200 a calf, you need 250 cows, right? So if you only have 100 cows now you know how many cows you need to run in order to make that happen. So you can increase scale, and this is the default. Nearly everybody that survived over the last 40 years and is still farming and ranching has figured out how to control more acres, produce more raw material, calves, corn, hay, whatever, so they can take the smaller incremental profit per calf or per acre, and they have enough acres that when they add it up, they have a tolerable return on their labor to pay for their desired lifestyle. Now, one caveat, this only works. Increasing your scale only works if you have a positive gross profit. So if you're the average, if the average cost to raise a calf is $900 and it costs you $950, and the market over time is only going to pay you $900, what's going to happen if you have more cows instead of less? You're going to lose more money because you're already a below average cost of production rancher, and you do not want to grow if it's already costing you more than the average person, the average rancher, to produce that calf. Does that make sense? The next thing that you wanted, the next thought or the next way to increase your profitability is to improve your productivity per acre or per cow. This area is the whole point of adaptive multi-paddock grazing. It's the whole point of regenerative practices. How do I produce more grass on the acres I already control? And then how do I use that grass in a way that I put more of the value of that grass through my cow, through my calf, and I have more pounds of calf to wean. This might be having smaller cows, more smaller cows that wean more pounds of calf total per acre than having big cows. There's a lot of great information, and there's a lot of good stuff, and lots of stuff we've already heard today about how to increase our productivity per acre, per cow. Don't do more with what we already have. Be more effective. Rarely can you, by simply cutting spending. You can't save your way into success in a commodity world. You have to simultaneously figure out how to produce more grass, more forage of higher quality, so that and then get a greater percentage of that forage to go through the combine, which is our cow, in order to harvest more of the value of that forage, while simultaneously leaving the land and the plants in a position where they can do an even better job of producing more feed for us next year. The last way, and this is a way that many of us have spent a lot of time trying to develop, but it's really hard, is to switch from selling a raw material, a weaned calf, to something that has more value. Add more value to that calf. Keeping it over and running it until it's a yearling and selling a yearling. Keeping that yearling until it's a fat steer, either on grain or grass. And the ultimate way to do this, to add value to the raw material, is to sell that animal as meat instead of a live weaned calf. The closer you get to the end user of the product, the more of the end consumer dollar you get to keep. But the higher the expectations are, that end consumer has a lot of expectations that we as ranchers are not well equipped to meet. So we really have to think carefully about, what does it cost us to do this? We need to talk about the fundamentals of ranch land markets, because even if you own land and you have no debt, you are still impacted by what's happening in the world of ranch land markets and the cattle industry. And the cattle industry and Intermountain West ranch land has a very, very unique, there's some things that are very unique about it that we don't see in any other business. There's an instinctive desire to own ranch land and cattle. It's hardwired, and I can't tell you how many clients I work with who have made a significant amount of wealth in other areas of life, in other businesses. And it continues to surprise me, the high percentage of those men, almost always, that once they've achieved some wealth, they're driven. There's a deep primal instinct that drives them to convert that wealth from cash or liquid assets into ranch land and cattle. Never once have I seen somebody that wanted to go buy a bunch of broiler barns or hog barns. It's always ranch land and cattle. And because they usually have a wife and a family, the scenic and recreational value is what drives the purchase location. Doesn't necessarily drive the desire to own the ranch, but it certainly drives that location. And so we have a tremendous variation in ranch values depending on where they're located. This phenomenon is not going away. So we really need to understand it, and we need to figure out how to, at a minimum, defend against it. And that's not the right word. We need to understand it so that we can expect what's going to happen instead of being blindsided by it. Because there's some positive things about this phenomenon. So with all those things as the fundamentals, now we get to start talking about the accounting side. If you are going to succeed in ranching or in farming, you're going to have to pick a strategy. Are you going to grow in scale? Are you going to grow in efficiency, where you're going to focus on getting more productivity out of the current acres you have, probably using regenerative systems? Or are you going to figure out how to add additional value to the raw materials you're already producing? So instead of selling that bison bull to a wholesale company, putting it on a truck and trucking it to Minnesota and selling it to High Plains Bison, or you shipping it to North Dakota to the bison co-op there, you're going to have someone come out and pay you $4,000 to hunt that animal, and you're going to build a little mini custom exempt processing plant on your ranch to process the meat that same day of the kill. That's a really innovative way to add an enormous amount of value to that animal. You probably more than doubled the value of that animal, and eliminated hundreds of dollars of your expenses by doing it. If you're gonna do all those things, you have to be able to have a way to evaluate their financial consequences. Because the whole point of having multiple enterprises, the one thing we know about enterprises is they always add more stress and more work. The reason that most ranchers and farmers raise commodities is because it doesn't require a lot of innovation. It doesn't require creativity. They don't have to learn anything new. Enterprises, by definition, mean you're trying something that you're not sure will work. And just like any other scientific experiment, we need to set it up in a way that we can easily measure the results and evaluate whether or not it's worth continuing, or we need to stop doing it because it didn't produce enough additional return to justify the additional stress. In order to do that, I encourage all of my clients, and this is really where we start getting into the work that I get paid for. I teach my clients how to establish an accounting system that has enterprise P&Ls for as many enterprises as they want to have. We establish an annual budget for each enterprise. We come up with an easy way ahead of time to allocate the expenses to each enterprise. And I'll give you an example of this. If you have to think every time you have a gas receipt, whether or not that fuel should be charged to your cow-calf business, your yearling business, your hay business, your direct marketing business, or your farm business, you're going to quit. You're going to not, that is an impossible system for you to keep up with, because if it requires you to make 1,000 different decisions, that's just overwhelming. So let's decide that all the fuel goes into fuel, and in the first quarter of the year, nearly all of the fuel is used feeding cows. And so we're going to allocate 80% of the fuel cost in the first quarter to the cow enterprise, and we're gonna allocate 20% to our direct marketing business. However, in the third quarter, when we're making hay, we're going to allocate 80% of the fuel to the haymaking business because that's where almost all the fuel is going in that quarter. We can decide that at the beginning of the year, and you never have to make another decision about how to categorize a fuel bill. We've made that once at the beginning of the year, and it's my job to allocate that at the end of the month. The fourth is we need a disciplined financial review process. And I typically recommend that at least the first year we do these monthly. And what this means is we're going to get together once a month and we're going to review your financials so far for the year, compare it to the budget, talk about if we're on track or off track financially, and then spend quite a bit of time talking about the strategy. How are the enterprises working? And are we happy with the current progress? I'm trying to get the lights to turn back on here. The next thing is, in order to make all this analysis work, we've got to use accrual basis financials, not cash basis. Cash basis financials are really only good for preparing a tax return. They're not helpful for running a business because they don't take into account the bills that you haven't paid, the sales that you've made but you haven't collected the money yet, and your changes in inventory. So when we do accounting, we want to reconcile your financials and show you what's actually happening in your business every month or at a minimum every quarter. And we only use cash basis financials for tax prep. Our financial review meeting, as I talked about, is a couple of hours a month with me or one of our other consulting CFOs. I have a team of about 20 people that we do nothing but accounting and consulting work for our large farm and ranch clients. Like I said, we're going to review the prior month and year-to-date financials. We're going to look at the budget, and we're going to talk about the strategy for improving the income to stress ratio. Most of my clients come to me at the beginning, very, very much like I've talked about a few minutes ago. They want to increase their profitability, and that usually means that they're going to increase their stress in some way. Growing and scaling up increases stress because it usually involves taking on debt. Growing an enterprise that we don't know how to do it yet. If we add sheep to our cattle business, there's going to be some stress involved because there's a learning curve in that. If we're going to deal with customers, instead of just having to deal with animals, there's a lot of stress in that. So we're going to check in and talk about we're going to rank each enterprise on its income potential versus the amount of stress that's required to generate that income. And then we're going to plan for the future. We're going to talk about what's your vision for the future? What are you trying to create here? Because within the first year, we're going to move out of a survival mindset, and we're going to start to think about a sustainability mindset. You simply cannot think about the future in a positive way when you're trying to survive. There's no judgment of that. It's just the reality of it. As we get a little more stability, it's always exciting to me how much time my clients want to spend talking about their vision for the future. It's always been in there, but they've never really had the time to allow themselves to dwell on it because there's too much that has to get done today. And so when we add enterprises, and Jared, you did such a great job of laying this out in your slides. When you add stewardships or enterprises, you create opportunities for additional people to join your team, either family members or key employees who have skill sets that are specific to those new enterprises. That requires planning, and it requires growing your leadership ability because your goal now, your responsibility as the leader is to lead this, not to do all the work. All of that, we cover all of that in our financial review meeting. And now that we understand why are we going to do enterprise accounting, We understand how we're going to do it. We're going to have a budget. We're going to have an accounting system that allows us to track things by enterprise. We've got to decide which accounting system and software are we going to use for this. So most farms and ranches that are under 2,000 acres and are not doing anything other than commodity production are actually pretty well served with an annual cash basis accounting system and an annual tax plan. That's what nearly all of you probably get right now from your local CPA. I'm sure they do a fine job of helping you close out your books at the end of the year on a cash basis, figuring out how to minimize your tax liabilities, prepare your tax returns, and maybe do a little bit of planning for the future, for estate planning, for succession planning, that kind of thing. And that works great. However, if you're trying to implement any of the list on the bottom of this slide, that's not going to be adequate for you. If you're trying to do multi-generational work, how do you expect the next generation to understand your business if they never get to see financials, if there's never a financial review process? I know lots of people who have been involved in their multi-generational family ranching business for 10 or 20 years, and they have no concept of how the financials work. That's not setting up that's not a legacy business. Why would you want your children to have to learn from their own trials and errors and mistakes later in life when you could be educating them right now about how the financials work in your ranch or your farm? Most of the time, the answer to that question is because you're not confident about how they work right now, and you'd be embarrassed to show your own ignorance. Well, let's fix that. Let's just admit that that's a weakness, and the good news is it's really easy to fix. There are really competent people out there in the world, including my team, that can within a few months have all of this organized and teach you how to use an understanding of accounting and taxes as a competitive advantage. So if you're multi-generational, if you're growing fast, if you've got a lot of leverage, if you've got more than 3 enterprises, or if you have any kind of livestock, you absolutely need more than just an annual cash basis accounting and tax plan service. My experience is very few rural CPAs, although they're excellent at farm and ranch tax law, they're not well equipped to provide the accounting systems that you really need to understand what's happening with your enterprises. First thing we do is to create a list of create that simple ranch financial system. We need to understand what are all the enterprises that you have now, and what are the enterprises that you think you might want to start in the future. What are the income and expenses for each enterprise, and how are we going to allocate the shared costs that aren't clear? So if you're planting sorghum, it's pretty obvious that the sorghum seed is a cost for the sorghum enterprise. It's pretty obvious that the sorghum, the revenue from selling the sorghum, is a cost, is revenue for that enterprise. But how much of the tractor repair expense should be allocated to the sorghum enterprise versus all the other things you use that tractor for? Well, that's something we're going to have to think about a little bit. We're going to have to come up with a method to allocate those costs. And we can change that method every quarter if we want to. We can change it once a year. We can change it every quarter. We'll come up with a method to do that. The next thing we need to do is to create an accrual basis budget for each of those enterprises. So we need to think through, what do we think is going to happen with this enterprise? So 200 acres of sorghum, for example, I think my yield's going to be this times the value is going to be that. That's my revenue. It's going to cost me this much for seed, for fertilizer, for chemical if I'm using that. I'm going to probably have this many passes through it with equipment. My average cost per pass for fuel and depreciation and repairs is X dollars. I'm going to probably have this much labor. All right, good. Now I've got the starting point for a P&L for my sorghum enterprise. After I get those annual budgets done, now I want to make sure that I'm closing my actual book. So I've got a budget, which is my guess about the future. Now I need to actually track what I actually spent so that I can compare my actual results to the budgeted results and produce what we call a variance report. And a variance report just shows me the difference between what I thought was going to happen and what actually happened. And this is where, when we design the budget, we have to think about when we actually pay the bills and have to code all of these expenses to an enterprise, are we going to be able to do that? Because the budgets don't make much sense if the actuals aren't comparable to them. So now, at the end of the month or at the end of the quarter, we're going to take your cash basis accounting, because that's most farms and ranches are basically have a checkbook, which is cash basis, and they make their CPA makes some adjustments to that at the end of the year to that are kind of mystical for most of us, and they tell us what the tax that we owe is. I don't want there to be anything that's mystical about this. I want you to be able to explain this to yourself, to your wife, to your kids, to your banker, to anybody that asks. How do you know that the financials are correct? Well, it's what came in and out of the checkbook. It's the bills that I haven't paid yet. It's the money that people owe me that I haven't received yet. And I've adjusted for the change in my grain inventory, my feed inventory, my livestock inventory, and my inputs. Because I may purchase hay in the fall that I'm not going to feed out till next year. That's going to be part of my feed inventory. I may raise sorghum, and the crop wasn't good enough to sell, so I harvested it all and I'm feeding it as feed. So now my grain enterprise needs to sell feed sorghum as feed inventory to my livestock enterprise. My livestock enterprise is going to recognize the cost of purchasing that, feed it to my cattle, and then I don't actually sell. I don't have a sale of the grain. I have a sale of the livestock. We have to track all of that at the end of the month, which is actually really easy to do if you have the right software. The final step is to schedule that monthly review where we go through all this information and make sure that it's right. There's 3 tasks involved in collecting ranch accounting data. The first task is just the data entry. Somebody has to open the mail, collect the documents, receive the email, review the bills, decide which bills need to get paid this week, take the scale tickets, deposit the checks in the bank, and manage the payroll, deal with the credit card statements, and collect all the receipts. That's just the bookkeeping work that's involved in any business. Most of our clients have somebody on farm that's been doing that for a long, long time. However, we've been surprised. I've actually been shocked in the last year how many new clients, when I say, if you don't want to do that, you don't have to do that. We have a staff, and we've perfected a system to do all that remotely. You can scan all those documents and send them to us, and we just take care of it. And my staff knows, most of them grew up on farms or ranches. We know this really well. We're going to do it as well as you can do it. Now, obviously, you got to pay us to do it, and you probably never paid yourself for those bookkeeping services. But I'm surprised how many. It's typically mom and grandma that have been doing this for 30 years. No one's ever thought to ask them if they enjoy it. No one's ever thought to ask them if they like doing it. No one's ever thanked them for doing it in many cases. And when they find out that they can hand this off to somebody else who actually enjoys it and do something else that 1, they enjoy, and 2, that adds more value to their farm, they can get involved in managing one of the enterprises. You never know until you give somebody an opportunity to stop doing something, whether or not they like it. we're finding it's harder and harder for our clients in rural areas to find a non-family member that they trust to do this work. This is not work that requires a high skill level accountant. What it requires is an extremely highly trusted person, because they're going to have access to all of the cash going in and out of your account. And in a small town, that's really hard to find somebody that you feel safe having letting them have that information, because it's not unlikely that they're going to be bidding. Their brother-in-law is going to be bidding against you at a farm auction at some point in the future. So it gets to be very tricky once you've either outgrown, or once the family member doesn't want to do it anymore. It's very hard to find somebody locally to do that. So we have the staff that are capable of picking that up and taking that on for whichever clients need that. The second piece is
15 minutes there, Todd.
All right, sounds good. I'm right on schedule then. The second piece is the data verification. And this is what we use, like the term is a controller. So that's a higher level. Our kind of our entry level folks are staff accountants. They do all of the transactional accounting that I have listed under data entry on this slide. The more experienced staff are called controllers, and they review the transactional work that was entered. They verify all of it. So they're going to make sure that the bank accounts and credit card and loan accounts are reconciled, and that the amount is correct on the balance sheet at the end of the month. They're going to adjust your inventory to make sure that your feed and livestock and grain inventories are correct. They're gonna deal with any equipment that you bought and sold, so that your fixed asset accounts are right. There's obviously a lot less time per month involved in the controller work, but it's a critical role that has to be done in order to produce the accurate financials. I rely on my controllers to close out the books and give me financials for my clients that don't have any errors in them. And then I take that information, compare it to the budget, and then I meet with the client as the consulting CFO, and we do all the things we talked about on some previous slides. We review the financials, we talked about the future, we talked about what's working, we talked about the leadership skills that are needed to grow and expand and manage multiple enterprises. And it ends up being a fair amount of family business therapy, as I call it. So here's some insights that we learned from implementing this. One is that we've been doing this for years and years and years, but we've pretty much done it with QuickBooks and Excel spreadsheets for the budgeting. It's very labor intensive. It has historically taken us a lot of time to do this, and so that's made it cost prohibitive for all but the largest farms and ranches. However, we're really excited about some new software that's just been released in the US called Figured. Figured is a software, it's a farm management software product out of New Zealand, which, like as all of us know, a lot of the new technology for grazing has come out of New Zealand, because when the New Zealand government got rid of their farm subsidies years ago, all of a sudden everyone had to figure out they were either going to exit farming and ranching, or they were going to become efficient. And Figured is software that was designed for grazing dairies. They have about 30,000 users around the world, so they have more users than any other farm management system by far, by tenfold probably. And it's designed to work with an accounting system. It sits on top of an accounting platform called Xero, which is similar to QuickBooks Online. It's a cloud-based accounting system that we actually really like. The problem is that if they tried to roll Figured out 2 years ago in the US, and it didn't work very well, because Figured didn't really have a way to do cash accounting. In New Zealand, they don't use cash basis accounting for taxes. They use accrual basis, and so they didn't build it with those features. And it was too hard for them to convince farmers and their local CPAs to learn Xero accounting. So they pulled it off the market. I've been working with them for the last 2 years to help them develop the features that were necessary for us to want to use it here in the US. They went through the incredibly rigorous process of getting certified by QuickBooks. So they now integrate perfectly with QuickBooks Online. In fact, QuickBooks is marketing Figured as their solution for all their farm and ranch clients in the United States. We really like it because it eliminates a lot of the time that we used to have to spend keeping track of all these things in Excel. And so here's some insights from what we've learned in the last 6 months of rolling out Figured to our clients. When we start with a brand new client that just has cash basis accounting, it's going to take 4 to 6 months to really get the financials dialed in. Every time we have a monthly review meeting, we identify a few more things that aren't quite right in the financials. We get them fixed, and then there's a few things next month and a few things after that. But within 3 to 5, 6 months, we're entirely focused on our time that we spend together on the future instead of on the inaccuracies in the financials. How many of you have tried to have a financial review meeting either with your family or with your outside CPA, and the whole meeting, all you do in the meeting is talk about why the financials aren't actually right? How many of you have spreadsheets? These lights just don't like me today. How many of you have spreadsheets that are half finished or that were right at one moment in time, but you never took the time to go back and keep them up to date? And now if you want to know and track a balance sheet, you're going to start from scratch and make a brand new one. Figured and QuickBooks together make all that go away. To be clear, we don't sell software. We sell organized financial data that you can use to run your business. We like Figured and QuickBooks Online, but there's other software that we use depending on the situation and the size of the farm and ranch. Let's talk about what it costs to do all of this. It typically is going to cost us, if you come to us and you've got some kind of accounting system right now, probably QuickBooks Desktop, you're using cash basis accounting, and you really clean it up once a year, it's probably going to cost $5,000 to $8,000 one time for us to set you up on QuickBooks Online and Figured with all your enterprises. That's gonna include setting up your budgets and redoing your chart of accounts so that you can actually have useful information that comes out of your accounting system. Then on an ongoing basis, to have our monthly review process with our CFO and have a controller review the transactions that you're doing yourself and clean it all up is between $2,500 and $3,500 a month. For the clients that prefer to do that quarterly, it's anywhere from $3,000 to $5,000 per quarter. Depends mostly on how much time is involved with our controller to clean up your transaction work and do all the reconciliations. And what you get for that is a monthly set of books, Figured in QuickBooks that are working. You get an enterprise P&L every month, and you get some time with me or one of our other CFOs to talk about both what's working and what isn't working in your business. If you want us to do all of the transactional work and you want to eliminate having to do any of the bookkeeping services, so the only thing you have to do is get the documents to us. And in some cases, that's as easy as forwarding an email. In other cases, you're going to scan it with your phone and send all those documents into a portal that we use to collect for each client. And then we do that. You're done. Once you send us a document, that's all you have to worry about. We're going to do all the rest of it. That's going to add another $1,000 to $2,000 a month, depending on how many transactions you have. So that concludes my presentation. I think we've got just a little bit of time for some Q&A.
Yeah, that was good. I appreciate you guys staying with us. I know sometimes the financial side can be kind of heavy. We like to talk about worms and bugs and cows and grass and all that stuff, but we can't do that if we don't do this, right? And so this is like the necessary supporting piece to be able to do what we love to do. And I'm so grateful that Todd has a way to be able to do that. So, if we're at that scale, I strongly recommend working with him because he understands it. He gets it. It's not somebody who just knows the numbers. He knows a steer from a heifer. Understands the yield. part of it as well. We do only have a couple minutes left, but with Todd, with what you do, I mean, what
No, I lost. I don't know if it's me that lost.
I'm back. I'm back. I'm back.
Oh, you're there. Okay.
Okay.
All right.
I tell you, just carry right on without me if I go blank.
Yep. Right.
Still haven't got Starlink up and working. We're still working off this radio deal. So yeah, just in a couple minutes. Where would you recommend somebody getting started? Like
Well, part of what we're providing is, somebody on my team or myself, we'd love to talk to you. So if you want to just talk about, let's set up an hour phone call. Let's learn about what you currently have, and let's talk about what's your vision for the future. How can we help you free up some of your time? First of all, make sure you have good data so that if you're going to have multiple enterprises, you at least can evaluate them. And two, um, in many cases, you can pay for what you pay us because we're a fixed fee. If I can free up 10 hours a week of your time and you go out and create an enterprise that or improve your grazing efficiency, that ought to pay you. You ought to be able to use those 10 hours a week to pay yourself more than what it costs for you to pay my team.
yeah, yeah, that's good. Absolute good way to look at it. With somebody who's maybe not well, first of all, so you've got on the thank you page, is it a link to your calendar? Is that what's supposed to be there to book that?
I'm not. No, I don't. I'd have to look and see. I can't remember what we put on that. The easiest way to do it is just to send me an email, and my email address is right here. It's my name on the Zoom, so it's todd.churchill@claconnect.com.
Okay.
I can put that in the chat here as well.
Yeah, that'd be great. That'd be great. And so, yeah, if you need help connecting with Todd, obviously, you know that there's a scale of businesses that he works with, but if you're at that scale, definitely. So I guess just a follow-up question. So if you're not at that scale, I mean, if you're in that startup phase, maybe you don't even know what QuickBooks is. You're just throwing your check register at your CPA at the end of the year and say, hey, figure this out. What would be the best place for that level of business to start at, Todd?
Well, you can actually go sign up for QuickBooks Online. That's $60 a month, and you can sign up for Figured, which is around $50 a month, and you can just DIY it. Now you don't get a lot of support from either one, as you can expect, because at that low rate for a subscription, neither company's really providing a lot of support. So they'll provide technical support. They'll make sure the software is working, but they're not going to show you how to set it up to make it track your enterprises. So if you want to play around with that, there's no problem with that at all. You can experiment that way. And even if it's a total mess and you throw it all away and we start with clean files, if you decide that you really want us to do it, that you've learned something, you've had a chance to get some exposure to the software. So that is absolutely an option to mess around with it and see if you can see what you think of it on your own.
So do you find that our sponsor for the day is Ranching for Profit, our RNC Ranch Management Consultants. Do you find that you speak the same language as the RFP alumni?
Yeah, very much so. Yep.
Yeah.
Much of my philosophies about this have been formed both by my own experience and by what I've learned from Dave and from others that have gone through Ranching for Profit. That's the whole point, is to figure out how to. Well, it was on the slides at the very beginning. I think there's a lot of overlap philosophically about our approach. The most common feedback I get is I've from people is I've gone to Ranching for Profit. I know I'm supposed to track my P&L by enterprise, and I've got a dozen half-finished spreadsheets that they gave me a template, but I can never really figure out how to make them work. And So the intention is there, the desire is there, but you got to have the right tool to really make it work. And we think Figured and QuickBooks is the right tool to actually deliver on Ranching for Profit's promise that if you actually have enterprise P&Ls, you're going to really understand your business in a whole new way.
Yeah, very good. Very good. But with that, I think we'll wrap it up, Todd. Thank you very much for joining us. I appreciate your expertise, your experience and wisdom, and sharing that with us here. It's a key piece. Like, if we are going to be regenerative, we need to be profitable. If we're going to be profitable, we better know what that even means, how to even track. Just like my story of when I started out, like, I didn't know if we were profitable or not. All I knew was that operating loan kept increasing each year. I
Right.
didn't know what was driving that. So reach out for help. And I mean, if it's not with Todd, with somebody, but boy, to be able to tap into that caliber is pretty awesome. So thanks, Todd.
Happy to be part of it. Thanks for inviting me.